So finally, I passed the HR round of that consulting firm, and on Monday, 8 o'clock in the evening, I have the second round. It's a technical round in which they will ask questions, they will test my Excel skills, financial modeling, and valuation skills, and all. So yeah, I'm excited for that. But yeah, so I just came to know that it's a work from home role, and there's a lot of uncertainty when it comes to work from home. But let's first crack the interview and then think about this. And I am little bit nervous about that AIF for interview because I've been preparing for that for a very long, and I am confident, but I do not know how the interview will unfold eventually. No idea about that, but yeah, I'm positive about this, and just because of this three interview. So I have like three interview in next 2 3 days, and my whole routine has been little bit disturbed because able to I'm not able to basically produce content, and I'm not able to edit my videos and all. It takes around 1 hour to record and edit the reels. That's why I'm not recording very quality content currently. I post on my Instagram just like a quick video that I shot. That's it. And so I do not know what will happen, but definitely it will going to affect my life if I get one of these job. And let's see how things will go from here. And currently, I'm also studying some of the things about IT sectors, and I am come across this uh, persistent system and Coforge. So basically, one question that I first encountered when I was just reading about the con calls of Coforge and basically persistent system is that the growth of these companies is way ahead of their competitors, like the top five and all, and even in the mid cap category also they are growing at such a faster rate. Then I deep dive into the financials of the company. So I come across this two company are in the particular domain of the industry. That's why they are coming up with so much great order value and so much like a good growth that they are showing on Q1Q and YOY basis. That's why they are showing that. For example, Coforge is basically into data engineering and product designing and basically cloud storage and so and so. And the vertical is also very different. It's 20 to 25% of the revenue comes from the traveling segment, which is very unique because most of the IT companies do not focus on traveling that much, and they show traveling and all in others part because that traveling just consists of 1 or 2% of their revenue. But here the Coforge is basically focused on, first is like traveling, second is BFSI, and third is like high tech, healthcare sector, life sciences. So it's a very unique proportion that they have. And even I was just reading, they just won a 1.5 billion dollar contract from one of the leading company in traveling in USA. So that's a very good thing. 1.5 billion is one of the biggest in the sector of traveling. It's basically size of the contract that these five giants take on, like basically TCS and all their contracts come like 200 million, 200 million, even billions of dollar. But that's a very good thing for Coforge, and currently it is trading at around 50 around 50 to 53 PE, and vis-a-vis persistent system is also growing at around like same pace, like 53, 55 is a PE. But what I think is persistent system, like growth wise, if I just compare both of these mid cap companies, persistence is high, over like a very trading at a very premium valuation. For example, if you just compare the persistent with the IT sector premium, IT sector PE ratio, then you just come to know it's trading at a 80% of the premium, whereas Coforge and Newgen and other companies like KPIT is trading much below than 80% of the sector's premium. So that's the thing. And persistent system, I think it's like the future growth is already built in the price of the stock. I don't see 13 to 16% stock return in next 2 3 year in in coming months or quarters. That's why I'm not seeing, and most of the research reports also like not seeing very upside in that. For example, if the let's say if the revenue growth is 20 22%, which is fairly with like a previous and contract value. If you just look at uh, those metrics, and 22% looks generous for persistent system, and 28% profit growth. Why is this higher than the revenue growth? Just because margin expansions happening in the company, both in Coforge and persistent system. That is why I'm giving the more profit growth. Although we can make a model of this and do some sensitivity analysis of that. But if I just do this, and if I just increase the profit by 28% in 2 years, and at the time, if currently the EPS of the company is around 110, so it would be around 180. Yeah, if I'm not right, it would be around 188 EPS, and that would be if I just multiply it by 35 KPE or the forward earnings, then the price won't be more than 40 to 60% upside, showing the 40 to 50% upside from the current valuation. That's why I don't think I would go with persistent system. Coforge, yeah, थोड़ा सा unique, and let's see how it. But I'm very optimistic about this KPIT technology business, just because it's a very unique proposition that they have. They are totally into auto sector. They don't have any other sector to work with, and the current headwinds and tailwinds that we have in this sector, it's making very like the position of this company is very attractive to me. And they are also having some business in China, and they are helping other companies to compete with China in European market, because European market disrupted by this Chinese original equipment manufacturer OEMs, and they are selling at a cheaper price with a higher functionality, and EV and hybrid, both kind of cars. So they like the legacy player in the Germany, and so they are threatened by these Chinese OEMs, and therefore, and the KPIT technology is basically in engineering R&D. Okay, so what happens? These companies showing good returns, and KPIT technology currently, like last quarter of the company wasn't very good, just because of this global uncertainty and the slowdown in the auto sector. That's why it's not performing. But the overall growth over the overall industry growth is very good, and they will have a very good market share also, if they just be doing what they are doing currently. So that's the thing. And the attrition rate is very like the lowest in the industry. I haven't seen any company which has a attrition rate of 7% in this IT sector, although there are like things that to consider here when we say the attrition rate. But yeah, it's very impressive, and I read the reports of the company. I just have to uh, I just now what I think I should do. I have I have basically created a Word file in which I was collecting the information about the IT sector. That reports has more than 40 to 50 pages right now. So it's it's like a mini book. So I have to figure out, because I was studying top 15 player, and I was studying their annual reports, their earning reports and all. So that's why like I call it like collected those data. So yeah, I can basically write a research report, a detailed research report on the sector now. So if you ask me what's happening in the sector, if you just want to highlight few things, if you just want to in short to tell someone what's happening in the sector, then I would say, so basically what happens, 60% of the revenue comes from the US market, 80%, 20% comes from this European market. Okay, rest 20% come from Asia, India, and we have Middle East. Okay, this 100%. Most of the companies in the in the IT sector, we have 60% come from North America. That's the first thing. So what is happening right now? The If we talk about the headwinds, AI disruption that is happening. More that AI disruption is basically pushing company to innovate very fast way. Okay, so what's happening? These big giants that we have, TCS, Wipro, Infosys, HCL Tech, they are little bit slow little bit slow to change their operation, to convert their whole pipeline into AI thing, to focus on AI thing. And but this small player like KPIT and Newgen and all, they pivoted towards AI very quickly, and most of their demand, most of their orders coming from these AI projects and all. Okay, so they are pivoting at a very faster rate. First thing, so the the effect of that AI disruption, top players losing share, slowing down because of this AI thing, mid player and small player gaining traction because of this AI thing. Okay, first thing. Second thing, this US thing that's going on, tariffs, H1B1 visa, and US and China war, those things affecting the ramp up of the deals. So, what's happening? Companies doing deals, these big companies that we have are getting good deals, but the ramp up means the conversion of these deals into actual projects is slowing down because of this uncertainty. Most of the companies in the US are in the wait and watch mode, like big companies. So they are not spending on this because they are worried about the recession. They just want to see how this tariff, how this uncertainty will unfold for them. So that's the thing. So US thing, and then we have US slowdown and AI disruption. Two things. Third one is the European slowdown. European market is also into like a flattish kind of growth. Both France and Germany are into kind of like turmoil because of their debt, because of their internal issues that they are facing. That's the thing. So that's why these big companies, and the thing to consider here, companies that is into discretionary spending. For example, spending for this company is not very important. For example, they are providing services that is not urgent. That's why the revenue of these five companies, TCS, Wipro, and other, going down. At the same time, the companies that have some specific domain knowledge and are giving products that are very crucial for this time. For example, every company now wants to upgrade their systems according to the AI. Okay, so where there is a demand, okay, that's why this company is growing at a 20, 30, 40% revenue, whereas these big companies are growing at 2%, 3%, 5% revenue growth. So that's the thing that I'm seeing in the sector. So we have a good headwinds also, and most of the companies saying that they have a good pipeline, but the decision making is slowing down for this company. But now they are seeing some recovery in this quarter, in quarter 3 and 4, and most of them are very positive about H2 of this FY26. So that's the thing that we have to look. And I basically, what I think about this IT sector thing, I think the company, the derating that happened because of this US issue, it will the valuation of the sector will definitely increase when they show some consistent profit again, when this dust settle down because of this global uncertainty. That's the thing. And I think it will be in the consolidation phase for next 6 months to 1 year. After that, I think the overall sector will be in the re-rating category. And second thing, I think that mid cap category is very lucrative right now. The companies that are putting that are producing some specific services, giving some specific services, currently have a headroom to grow a lot. So the company like KPIT, Newgen, and GoForce, Persistent, although they are trading at a higher valuation, but I think if they continue to grow at a faster rate, that like the growth, the stock will definitely go up. And so what are just seeing, these big giants and the mid cap fast compounders always trade at around, like, not always, but most of the time in the recent history, like in the recent 1 year 2 year, they are trading at double the valuation. So currently, if I just see the top TCS and Infosys, they are always trading at around, like, the lowest they are trading at around 15-20 PE, and currently they are trading at around 21, 22, 25. And if we just double it, it's like 50 or 60. So mid cap trading at 50, and like 40s to 50s, the high growth stocks. So I think the lowest the PE rate re-rating de-rating for these stock, the high compounders would be, if I just assume that let's say TCS is trading at 15, which is unusual, very unusual. I don't think it will going to happen in the near future. Like, just worst case scenario 15, then we can give 30 PE to this high growth compounder. Then I think we have a, like, a much lesser side in this mid cap category, and they'll grow from this point. So that's it. And just one thing more apart from this thing, uh, I think, yeah, I can talk, like, I can talk about that thing in the different video. So that's it.